look at the S&P 500 as we get ready to trade the final week of October 2021. This weekend marks the anniversary of the 1929 market crash. So let's see if there's any kind of commemoration of this on Monday, a delayed response to it. Let's start off looking at the intraday chart of the S&P 500 going back to Wednesday. And as you can see, we've definitely got some activity here trying to hold us open above the August close at 45.22. So this was the August close, and then a couple of days later, we marked an all-time high, rolled over and sold off, and now here we are at a new all-time high, and our lows are trying to come down and hold that August close. You can see here was on Wednesday, 44.24.40. Thursday held a much higher low against it, but then Friday broke down a little lower, held at 45.24 flat. Holding open a gap here to Tuesday's close down at 45.19, and like I said, holding above this August close. So clearly this 45.24 to 45.22 area is a huge line in the sand. Maybe we're going to finally see a little bit more meaty profit taking if this is allowed to finally go down. We set a new all-time high on Friday, a look below 45.60 and fail, 45.59.67, broke down to this new low, just a look below Wednesday's low, made a comeback into the afternoon, but then went and failed to make a new all-time closing high over Thursday's close, but made a new weekly all-time closing high over the one that was still hanging out since last month. Like last September was like a year ago, last month. So kind of a mixed bag here. You know, we always know that we got to stand at caution here when we make a new all-time high and then roll over and don't close at a new all-time closing high. But to just add confusion to the mix, we made a new weekly all-time closing high. So who knows what's going to happen on Monday. On Monday, we also have no 10 o'clock data. So that usually paves the way for a big move in the morning. Could it be a move higher or a move to finally break down and break below 45.24? Let's find out. But this is where we stand right now. That's the analysis. Let's take a look at the roadmap. If we are going to start to pull back, we have to see that 45.24 to 22 area close and this gap fill. Then we sort of like kick off a cascade of filling some more gaps to the downside. We have four gaps below us right now when you include this little one right below us that would kind of kick things off. 10-day simple moving average is going to rise all the way up here on Monday, going to be right below the next gap. If we have topped out for now, the halfway back for the month of October and for the quarter right now, we take this high, we take our October low, we add it together, we divide by 2, and this is where our October halfway back is at 44.19 and change, and our 20-day simple moving average is right below there. We know from experience what we just went through in September, if we were to lose the 20-day simple moving average, we're probably going to really fall a lot lower. But if we come down and hold the 20-day simple moving average, that's a huge buying opportunity. And right now, that 20-day simple moving average is rising right towards the October and Q4 halfway back. So if we are going to get some selling going this week, this is our target, and we want to look to buy this dip and have our nice rally for the rest of the quarter, or at least going into Thanksgiving or early December. And if we break this halfway back, we're probably going to cascade a lot lower. We've still got an unresolved October low on ES. Maybe they want to get this taken care of before the month is out. Or maybe it's just going to stand as a quarterly low and they're going to blow past the fact that it hasn't been resolved in the month of October and just use it as some kind of place that we're going to have to revisit before year end. Okay, so that's what the roadmap can show us. What we use the more simplified daily chart for is where we go if we are just heading higher. So with no data on Monday, maybe, and with that new weekly all-time closing high under our belts, maybe we're going to come out of the gate and rally higher, in which case we're going to continue towards our goal here of a double up from the move from the October low to the 50-day simple moving average, and that would take us up to 45.93 to 45.94 or so. That would be a measured move target. That is so close to 4,600 that we could just blow past it and maybe take a look above 4,600 before we fail and fall back. And of course, if we take out this all-time high and move higher, we're going to have a brand new halfway back for October and Q4. So we'll rethink that whole 45.19 and change level that's sitting down here around the 20-day. And of course, if we make it up past the 50-day, if we make it past this measured move target, our halfway back is going to be somewhere around the 50-day instead, because that's what this measured move target is all about, a doubling up of that takeout of the 50-day. Okay, hope that all makes sense. Let's take a look at the options and then let's wrap this up. I want to tell you something about the data, which I'm going to leave from now on for you guys to go and look at yourselves. There's no data on Monday. There's just some housing data and a consumer confidence read on Tuesday, which hasn't really been moving the markets that much lately. But on Wednesday, we have durable goods orders. That's a big one that tends to move the market. And on Thursday, we have a preliminary read for Q3 GDP. That is that could be a big market mover. So maybe Wednesday, Thursday, we're going to have a big market moving data, set coming our way. So that could pave the way for this move higher if the data is light and really inconsequential on Monday and Tuesday, and then maybe we start seeing some profit taking on Wednesday, or maybe I've got it exactly backwards. Maybe we're just going to start pulling back, and then there's going to be a short covering rally ahead of that more important data, expecting it to be better than expected, because right now, one of the reasons why we're having this big rally is because the earnings are coming out better than expected. It started off with the banks at the beginning of this rally early this week, and has continued on and so forth. Okay, let's take a look at the options here. Over on the put side, you can get all the way up into a 4,500 put for, looking for the $11 window on that. Right now, they are below the $11 window. If we are going to open flat or kind of roll over a little bit off the open, we want to see that these stay at the $11 window, and we can get in there. If you kind of miss the boat on that $11 window, you can come down here to about the 44.80s to the 44.75s. You can see there was a nice standout in volume here on Friday at those, and you want to see those pick up the $8 window. Over on the call side, if we're going to open kind of flat and move higher, you want to be looking to these 45.75s because those are going to go well into the money. That's what we're looking for, something that's going to go into the money that we can hold on to for a couple of days on the call side. And if our target is 45.93 to 94, these are going to go 20 bucks in the money. So these are going to go from an $8 entry to over $20 plus the premium. So that's the kind of money we want to make. We want to make like a triple on our options when we're playing the S&P 500 options. And that's where the nice volume was standing out. That's where I would be focusing my attention, is trying to get into these 45.75s and not really just being that dude that's got to go all the way out of the money to 4,600, which isn't even, we're not even really looking for a move past 4,500. We're kind of looking for a move to look below it or look above it and fail at 4,600. So I would really rather be in a strike below 4,600, so it goes in the money and it just automatically collects a nice double, triple, quadruple on my initial bet. Okay, that's it. I hope this video helped you out and gave you a good sense of where we're at and where we're going. Let's see what the cards read for us tonight in futures. Sometimes what you see in futures is not what the open prevails and does for us. So don't count on it, but at least it'll sort of maybe give us some clue as to what's going on overnight and what the overnight traders are thinking. Have a great rest of your Sunday. As always, good luck and good trading.